Imagine waking up one morning and nothing seems different. You still grab your coffee. You still check your phone. You still go to work. But something invisible has already changed. Your money is now worth less than it was yesterday. Not because you spent it. Not because you made a bad decision. But because somewhere in the world, a conflict just pushed oil prices higher. And without realizing it, you've entered a financial trap. Most people think wars only affect soldiers, governments, or people living nearby. If it's happening far away, it feels disconnected from your life. But the truth is, wars don't stay where they start. They travel through the global economy. And the fastest way they reach you is through oil. Because oil isn't just fuel. It's behind almost everything you use every day. The food in your fridge had to be transported. The package at your door traveled across cities. The electricity in your home often depends on energy markets tied to oil. So when oil prices rise, it doesn't just make gas more expensive. It quietly makes your entire life more expensive. Let's break this down in the simplest way possible. Think of oil like the blood of the global economy. Everything flows through it. Now imagine there's a sudden conflict in a major oil-producing region. Supply becomes uncertain. Traders react. Prices start rising. Sometimes, prices rise not because oil actually ran out, but because people fear it might. And that fear alone is enough to move markets. The first thing you notice is gas prices. You go from paying something reasonable to suddenly questioning every drive you take. At first, it feels like a small inconvenience. Maybe you drive less. Maybe you complain a bit. But that's just the beginning. Because the real impact doesn't hit you directly. It spreads quietly through the system. Companies rely heavily on oil. Trucks delivering groceries need fuel. Planes carrying goods need fuel. Factories producing products depend on energy. So when their costs go up, they don't absorb it. They pass it on. Slowly. Quietly. Your grocery bill increases. Your online orders feel slightly more expensive. Your rent starts creeping up. Your electricity bill gets higher. And here's the dangerous part. It doesn't happen all at once. It happens gradually. So you adapt without questioning it. You just feel like life is getting tighter. This is where inflation comes in. But not the kind people usually think about. This is cost-driven inflation. Prices rise not because people are buying more, but because it's simply more expensive to produce and deliver everything. And oil is one of the biggest reasons this happens. Now here's where the trap tightens. Your expenses are rising. But your income? It stays the same. Your salary doesn't suddenly increase because oil prices went up. So what happens? Your purchasing power starts shrinking. The same amount of money buys you less than before. You're not necessarily spending more, but it feels like you are. And over time, this creates pressure. Not just financially, but mentally. Because when people feel like money is tighter, they change how they behave. They start cutting back. They delay investing. They avoid risks. They focus only on immediate needs. Instead of thinking about building wealth, they start thinking about survival. And this is the real trap. Because it doesn't just affect your wallet. It affects your mindset. And your mindset determines your future. There's another layer most people don't notice. When oil prices rise due to global conflict, markets become unstable. Stock prices move unpredictably. News becomes more dramatic. Fear spreads quickly. And what do most people do? They panic. They sell their investments. They pull out of the market. They wait for things to feel safe again. But here's the irony. By the time things feel safe, prices are usually already higher. Meanwhile, experienced investors don't react the same way. They understand that uncertainty is part of the system. They adjust, not panic. Sometimes they even take advantage of the situation. Because they know something most people don't. Wealth isn't just built in stable times. It's often built during uncertain ones. So what's really happening here? The oil price trap isn't just about oil. It's about how global events quietly shape your financial life. And how your reaction determines whether you fall behind or move forward. There are two types of people in this situation. The first type sees prices rising and feels stressed. They cut back on everything. They stop investing. They focus only on getting through the month. Over time, they slowly lose ground. Not because they made a big mistake, but because they stayed in reaction mode. The second type understands what's happening. They know prices are rising for a reason. They accept that inflation is part of the system. So instead of panicking, they adjust. They keep investing consistently. They think long-term. They focus on protecting their purchasing power. They don't control oil prices, but they control how they respond. And that changes everything. Here's something most people never realize. When inflation rises because of oil shocks, wealth doesn't disappear. It moves. It moves from consumers to producers. From reactive people to strategic thinkers. From those who panic to those who stay calm. The system rewards understanding and quietly punishes ignorance. Think of it like this. Imagine you're standing on a moving walkway at an airport. If the walkway is moving forward, you move ahead even if you stand still. But if it suddenly starts moving backward, standing still means you're actually going backward. That's what inflation does. That's what rising oil prices can do to your life. If you don't adjust, you slowly fall behind without even noticing it. So what should you do? Not panic. Not obsess over every headline. And definitely not try to predict wars. Instead, focus on understanding. When prices rise, ask yourself why. Is it supply? Is it fear? Is it global tension? This awareness alone puts you ahead of most people. Don't rush to sell your investments just because the market feels uncertain. Volatility is normal. Fear is normal. But reacting emotionally is where most people lose. Think long-term.